Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy Cruz here in Business Development.
And I'm Brian Landeros, a.k.a. Brian Lands Money on Instagram.
Whoa. And I'm Will Flores with Mortgage Heroes, your VA loan specialist.
Well, welcome back, guys, to another show. Last week, for all you who missed it, we had a pretty cool topic. We talked about the $2.3 trillion decline in home equity over the last 8 months. And then we ended that show on a semi-positive note because I brought up today's topic, which is reverse mortgages. So we're going to talk about reverse mortgage basics. Everyone is starting to talk about reverse mortgages, and I can't help but think that it has a lot to do with two primary factors. Number one is elevated mortgage rates, or in what our world, forward mortgage, right? Mortgage that looks ahead
Forward
and you
mortgage,
make payments.
like that.
Forward mortgage. So elevated rates in that space matched with historic home equity that is accessible. So,
Yes.
I know very little about reverse mortgages, admittedly. So let's talk about what a reverse mortgage is, who's it for, and how can it be used, guys. Let's dig into it.
It's for everyone.
That is 62 years or older.
There we go. And
First strong comment.
No, a reverse mortgage is great, especially if you know how to leverage it.
Okay, got it.
So it's a phenomenal tool for people to use. And as you saw with the equities being built the way they have in these last years, we already know baby boomers have the most equity there's out there right now.
Yeah, actually,
it's
that's
crazy.
I saw something cross my screen about that of all the generations, the baby boomers have the most equity that's accessible to them.
That's correct.
Which is also a great point when it comes to reverse mortgage because they'll be the ones to first qualify for it.
Yeah. Yes.
Well, yeah.
And then we also know back in the day, Social Security, I mean, even though they work endless amounts of hours, their Social Security wasn't as high. It's not going to be as high, you know? So,
Yeah, what they get back from it?
correct.
Yeah.
What they get back
Yeah,
from
yeah.
it in comparison to people who are retiring, you know, in recent years.
So then what's your point you're making about
My
that?
point is new way to supplement their income,
There we go.
right?
All right.
So
Got it.
what's great about a reverse mortgage, Andy, since you're a new one at this, there's no mortgage payments. Okay?
Yeah.
There's
Yeah.
no mortgage payments that are made. So you can live in your home, right? When you rent, you pay a rent. When you own a home, you make a mortgage. Well, with the reverse mortgage, you own the home, you know, but you make no payments.
Right.
Okay. Mortgage payments. That means principal and interest.
Okay, what about taxes? You still pay taxes and all that?
Yes, you still have to make your property tax and you still have to make your
You have to have
homeowner's
insurance,
insurance.
right? Okay,
That's
yeah,
correct.
yeah.
So that still has to remain in place.
Okay.
But it's a great tool to leverage. So if you're on fixed income and your Social Security is not as what you expected, but you do have a mortgage still, you know, and you have a home that you're making payments on, well, you won't make the payments on that.
Right.
Or let's just say, hey, you know what? I want to go ahead and take some money out and get some monthly income out of my house. You can take that.
So the way I've heard it that you can take the money out in one lump sum, or
That's
you can
an
take
option.
payments to you, right? You can
Correct.
take money from your home's equity in a reverse fashion. So instead of you paying the bank is paying you, but with
Correct.
your equity along the way.
That's correct.
Okay. Okay, that makes sense.
That's pretty cool.
In the case of someone who needs a supplement, where they're maybe short every month on their Social Security payment, or they're receiving Social Security, they can augment that by having a lot of cash in the bank one time, or taking monthly payments from reverse mortgage to themselves.
That's correct.
Okay,
So
got it.
one of the points that I wanted to make was, how 401ks or retirement and pensions are tied to certain investments that are, controlled by the economy.
Yep. Yeah,
As
yeah.
you know, what's happening with the economy, Fed's basically, causing havoc everywhere to try to fight inflation. What has happened to a lot of investments, throughout the last 2 years, that have been tied to certain economic, industries that basically cause your 401k to deplete or your pension to, deplete because of the fact of how the
Right,
economy
the volatility of it, if you will.
Exactly, right? So at the time that, let's say you retire and there isn't going to be enough income to basically suffice for your cost of living, your medical expenses, if you do have any, and just in general, I mean, you worked your whole life. Don't you feel like you deserve to be able to play with the money that you've earned?
Yeah.
Yeah.
Wow.
And
Yeah.
I feel like that's what people don't really take in consideration, that after you worked your whole life, why wouldn't you enjoy the rest of your life?
Yeah. Well, yeah, I think when we had the week that Brian was gone a couple weeks ago, we had talked about how people might need this money for either physical needs, medical needs, or just financial. So it's kind of in one of those buckets or a combination of those buckets too. So yeah, but then to Brian's point, even like, what about having fun? Like, what about living your best years out?
The way Brian put it, it's like I almost brought a tear to my eye. You know what I mean? Like, I can tell he's talking from the heart. Like, Brian, you have older family members or something? Like,
I do. I have my
you
uncles.
could relate to this.
I have
It's
my
crazy.
tios, and then I actually was at a meeting with the realtor this past week, and she spoke to us about how she explained it to her parents about having the reverse mortgage for their benefit, and she said, "Hey guys, like, what, you guys worked your whole life. Your Social Security is pennies compared to the life that you guys want to or deserve to live.
Wow.
Why don't you guys take your equity and go play with the money? Like literally, she said, go play with the money. And when she said that, I was like, what else do you have to do after you work your whole life? Like,
enjoy it.
Like go travel, use the money.
That's
the
cool.
best thing is that you don't have to pay it back.
Don't get me emotional here, Brian. Like, this is, I just feel like it's coming from.
I just hope that everyone that's listening to this, everybody has a grandma. Everybody has uncles that are older. I have parents that grandparents that are older. So it's just like, hey, if you're able to help them out or just pass on this information, a lot of them do struggle with money. A lot of them do struggle with sickness. A lot of them do struggle with medical bills. So it's like if they have this safety net and the security blanket in their house that they already accumulated over years, and we know boomers are known to not touch equity since they bought their house.
Right.
And Brian, you bring that up, and you bring it up. It just reminds me, like my grandfather and my grandmother. My grandfather worked, he worked. He had this truck where he would sell produce. So he'd wake up at 2 a.m, go load up like for milk and stuff like that because you couldn't leave it on the truck. And then he'd go. They call this big truck la vaca, which means the cow, right? He even had a horn that it would go right. So seriously, he'd go to a corner and people already knew he's there. So they'd come. It's kind of like the ice cream man, right? When they come and they hear this thing, here comes the ice cream man. But in my case, here comes the vaca. Here comes the cow to sell
produce.
Like groceries, right? Like tortillas. He would sell all that stuff. So we would wake up at 2 a.m, just to go load up. And I would go visit during, the weekends, or not the weekends, I'm sorry, when there was breaks at school. And I love it because not waking up that early, but I love it going with them because I already know he's going to treat me how to get the best cereal like Cocoa Puffs or Lucky Charms. I want to be Lucky Charms, you know what I mean? So I do stuff like that. So we'd go over there, load up the tortillas and all that stuff. But I would see how hard he would work. So he'd go to this place. I didn't know it, but that was actually, he was an Uber driver at that time.
So that's what I was just going to say. I'm
Uber
like,
delivery,
Uber
right?
Eats?
If you would have known. Or he was Amazon already, right? He was Amazon delivering, you know what I mean? That's pretty crazy. But we would see this and thinking back, I would never see him travel. Ever, right? He was just work because he would do that Monday through Sunday. Sometimes he'd go to my dad and my uncles, they play in a soccer team, so he'd go watch them. And that would, as far as they go, but he had to make it quick because he had to go pick up the vaca. Right? The vaca's got to go back home, so we got to go reload and do the same thing over. So long story short, his house was paid off. His house was paid off. 2-bedroom house, 1 bathroom. Right? He did one of those patio covers so that we could all sleep in there. The garage was a 1-car garage. We had 5 beds. We would break the beds because we'd jump on these things, right?
ADU back in the day.
We did. It was an ADU, right? But they didn't know leveraging, they didn't know the word leverage to utilize their home so that maybe they could have taken that time off. Maybe they could have gone out there and visit, this beautiful world. Instead, we're a small little speck in LA. So you bringing it up, it just brought me to that. So I appreciate that.
Crazy.
Of course.
And I want to share that.
All these years I've never heard, I just never knew that. That's amazing.
Yeah, I know, me too. I was like, wow.
Yeah, full of stories.
So one of the things that you brought up is that all they knew was hard work, right?
That's it.
And that's the one thing that I do feel from the generations before is that they knew that if they showed up, they worked hard, that was, what supposedly was going to get them to the next level in life, right?
Right.
But as we've seen how everything's been developing, technology, the economy, you realize that what you're doing in one single income isn't always going to be the best route for, whatever it is you want to do in life. With cost of living rising every year, with things only getting more expensive, how can you offset that when you don't have the income anymore?
That's an interesting point. I was writing this down right as you said that. I'm like, it's the house working for you.
Yeah,
we spent all these years working for the house, but now this is kind of the invert. The house is working for you. And I think some people's hesitation might have been, well, wait a minute. I'm not going to have this house with this equity to pass on to my generation. But that's not true Because and I'm having this revelation as we're talking. Like, it's not true because
just like I did.
It's because let's say there's $400,000 of equity, or just for this conversation. Well, if 100 or 200,000 of that is used over 5 years, 10 years, well, the house is still increasing in value over that time.
Correct.
Assumed. But then there's still the remainder of that. Meanwhile, during the duration of time you've been taking that money out, you've been receiving from the house something back you put into it. Or the market has helped increase that value and the equity is gained. You're actually accessing that. Because we just talked in our last show, like $15 trillion of equity was created since 2020. That's crazy. There was a 2.3 trillion pullback. Okay, so we're still 13 trillion higher than where we were.
Imagine reverse mortgaging back then.
Well, or now. I think that's the epiphany I'm having. Is like, this is going to be a huge deal for people, especially as they get older. If inflation stays entrenched, then that is going to be a problem where people's money in every month may not go as far as it did before, and they're going to have shortfalls that need to be made up somehow.
Correct. We're already seeing the savings go down. I mean, look at the Fred chart. It's literally tanking.
Savings Fred savings is down, debt is up. Well, so can this, is it just a refinance? Because I know there's a reverse purchase too.
No. So I kind of want to touch base why I think a lot of people don't touch this, or just kind of, we hear all these commercials and it just says it's just for retirement, but it's not just retirement. Nope. It's leveraging your lifestyle, but the traditional way
that's how they corner it?
That's how they corner it. Oh, for if you didn't plan your retirement right, like here,
you can failed or something.
Correct.
So it's already kind of like,
whoa.
At least I saw a Magnum PI guy,
And boomers put it on that. Can be a little bit prideful.
So you see these commercials, they're very misleading. Very misleading, right? And so we think as, my parents, they have that equity, but they're very old tradition too, right? Like the best thing to do is pay off your home. Pay off your home. So you don't have any debt, right? Like that's the thing. That was the norm. I was raised with that. When I bought my first house, my aunt told me, "Oh, mijo, don't get in that debt." You know what I mean? But thank God I went against it because I wouldn't be where I'm at now, only multiple properties.
100%.
Those are, if you leverage it right, that is part of your retirement. So if you didn't have a 401k, which wink, wink, I don't have one, I don't rely on one, I create my own retirement in a different way. Right. And so understanding the value, the equity, if you leverage that, like I mentioned that early, the right way, you'll be ahead. You enjoy your life like you just said. You know what I mean?
Knowing what I know now, I mean.
Exactly. And you know what? You're saying that, but fast forward 10 years, if I would only know what I know now.
Right.
We always keep saying that.
Yeah, exactly.
So now we know. Now we can start.
So this is that that sign. Like if you've been waiting, if you need money, if you have a house and you're 62 years older, this is your sign.
That's it.
So there's a lot of benefits. That's been great. You guys have brought a lot of things to the table. You said 62 year old. So 62 is at the time of funding. You need to be 62.
So from 62, it becomes eligible for you to be able to do a reverse mortgage. But there is in-house products from certain lenders, and one that we use predominantly that has a program that goes as low as 55 years of age.
Oh, really?
Yeah.
I didn't know that.
Yeah.
That's amazing. Okay.
Yeah. So, I mean, for those that are, squeezing up to 60.
Yeah.
Hey, you know who's going to be 55 in a couple years?
Oh!
Just actually, you're 5 years. Oh my gosh!
Yeah,
First to
crazy.
50.
Time flies.
First to 50.
I heard he has a few houses too.
Yeah. Trying to prepare it.
Yeah, we'd like you to do a reverse mortgage.
But there's all these benefits that you can utilize that, right? Even me, if I was back then, knowing that what I know now, back with my grandparents, I would have been like, okay, well, you're going to need to start creating your house for your comfort, right? Like putting certain things like bars when you go in shower, readjusting the shower instead of being a tub. Maybe it's just a walk-in. So you can use some of that equity to, make your home friendlier to your age. So there's things like that you can do so you can have that comfort. Or do I just put my grandparents in a nursing home? Well, what if I don't want to do that and I want to just use that so they can have a caregiver come instead and they stay in the comfort of their own home?
I wanted to
That's
talk
how you're
about
happiest,
that,
probably, right?
I would hope so.
Just saying, that's what you're used to.
Hey, Santiago, if you ever got to put me in a retirement home, bro, better be my own.
I wanted to talk about that in this conversation. What situations are we talking about? Because I'm sure there's a lot, but obviously, who can get a reverse mortgage? Someone who owns a house or is going to use a reverse purchase. They got to be 62 or in 55 in some cases. But I can think off the top of my head a couple situations that might require someone to get a reverse mortgage to access money when they're short cash, right?
Yeah.
So you're just bringing up one of them. They need in-home care. I know, and I had mentioned this on a previous episode, that when my grandmother needed care for dementia and end of life, it was like $9,000 to $10,000 a month to start. And that's like not even including activities of daily living and all this other stuff. And it's like, that's a lot of money. So if someone doesn't have that, let's just say it's $120,000 a year.
Yeah.
If you don't have that saved up for 5 years, which is $600K, that money has to come from somewhere else.
Yeah.
And I'm talking about this was years ago. This isn't tomorrow or yesterday. This was like 4 years ago still.
Yeah.
So obviously costs have increased. So that number is even still probably really inaccurate to the low side. Okay, so we have situations
inflation,
where you need in-home care. That's one of them. And then I guess another one would be if you own the house, but you actually have to go into a care facility, the house can still be reverse mortgaged, right?
No, it has to be your primary residence.
Yeah, you have to stay in there and live in it, basically.
You have to be living in there.
I'm glad I asked that. I didn't know that.
Yeah, but once you did the cash out, let's say you did the cash out, then you'd have to, pretty much convert it into a conventional loan, what have you.
Got it. Okay.
At least you have
Finance
the
that
funds there.
Yeah.
Okay, so as long as it's happening and you're still occupying the residence, then reverse is going to qualify.
Yeah.
Okay,
That's why-
I'm glad you said that.
Yeah, that's why the best bet is, adjust the home to conform to the needs.
Okay.
You know what I mean? And they're going to be more comfortable. Just like your grandma was there, I get. She probably, because dementia, she had to go to a facility.
Yeah, she needed actual nursing care.
But guess how many other people are there and the attention they get rather than being maybe at home in their own comfort.
Right.
Of their own property.
Right.
100%.
So there's physical needs, there's medical needs,
That's
possibly, and then there's the financial stuff.
Yeah, supplemental.
One of the specifics that reverse mortgages are like anything in real estate. It's not a one size fits all.
Yeah.
So
Yeah,
one
good
of
point.
the things that
That's
they do measure it off a lot is your home value, your age, and your loan to value. So depending where you fall in those thresholds, you're going to have a different case of numbers, different ability of how much you can pull out. So all those basically get factored in once you're actually into the crunchy numbers and really getting down to the nitty gritty.
Exactly.
So life expectancy plays a part of that because depending on when you originate that
Absolutely.
loan and how long your life expectancy is, that'll
Correct.
And
determine
there's
the-
charts that show you more or less how much it is. So if you want more information detailed to your specific situation or your grandparents or your tias or whatever,
No obligation.
no obligation. Shoot us a message at the end,
right.
and we'll be glad to break it down. For
And
you.
it's very simple, Andy. Honestly, it's this simple. All we need to determine more or less, just to have give you an idea what you can do with the property, is we need
birthday.
birthday,
Okay.
how much,
You
what's your loan balance,
Okay.
yeah, and we identify the value, and that's really it.
Yeah.
Wait, no credit?
No, we don't
there's
want
no
credit
payment,
right now.
so there's no credit.
But no, there is credit. There's always credit
Oh, okay, got
because
it. So there
it's
is a credit-
lending.
There's a credit pull still because it's a loan.
Because
Got
it's a HECM. It's still an FHA loan.
Yeah.
Oh, okay, got it.
Okay, so it's still, it's still secured by the government. So
Understood.
that's what's great about it.
All right.
So we just need to see those things, and with those
Got
things, it'll analyze what's going to be the best product. Because what we didn't talk about is there's another product. Like for instance, we had a client that she just simply didn't want to make a $2,500 monthly payment to her mortgage,
Like her regular full
Yes,
mortgage,
but she wanted to get $300,000 as a line of credit, and she's like, "Hey, I'll do that. I'm gonna put this line of credit." And the great thing about that line of credit of that $300,000, she's earning 7.5% interest on that line.
She reverse mortgaged.
Oh, wow.
Reverse, correct.
So it's
no
gaining-
mortgage payments, right? She's paying no mortgage payments, just her property tax and insurance, which in this case was like 300 and change.
Oh, she's been there a long time.
She's been there a long time, and so she took that 300,000, Andy, 7.5%. The beauty of that, that by year 5 she'd earned already almost half of what she had in there.
Wow, that's
So
crazy.
that's for somebody who doesn't need, that for her, she saw, I can use $2,000, $2,100 just as extra money.
Yeah.
So I could go travel, I could go do these things.
Yeah. Wow. Okay.
You know what I mean? And I don't need that money to go do retrofit anything. I just want to go enjoy life.
Have fun.
Go play
I just
with your
wanna
money.
Go play with your money.
That's awesome.
10 years, that line of credit will double.
Yeah.
Wow.
It was crazy. It was like,
rule of 72. That's what that is.
Yeah.
oh,
Yeah, that is-
okay.
that
There
is.
you go. And then here's the best part of it. The money, once it's used, tax free.
Wow. Okay.
It's not considered income.
Okay.
Tax free.
All right. This automatically makes me think of like who we need to be talking to. So
Yeah.
also who could be watching this. So if you're listening to this and you have a financial planner or a trust and estate attorney or a tax person who
That
maybe doesn't
understands.
know or either does or
Yeah.
doesn't know
Doesn't,
about
yeah.
this,
Yeah.
we need to get those people on either in a
Correct.
conversation like this, or you need to introduce us to those people so we can maybe educate more about what the consequences and benefits are of this in all those areas. So I wrote down financial planners, tax people, and then family law.
Yeah.
Not family law. No,
Yeah.
not divorce law.
Yeah.
trust and estate attorneys. Trust and estate.
But in
Okay,
this
got
case,
it.
it's phenomenal. Again, not one size fits all.
No,
right?
not at all.
Yeah.
Never.
It has to do with the age. It has to do the value of the home.
Yeah.
How much you owe, etc. To be able to determine what's going to be best suited for you in that situation.
Yeah, this is really good, guys.
Yeah,
I'm
no,
so
I
glad
loved it.
to
I was
talk
like,
about this.
I can't wait to be 62.
Well, and on the heels,
No, I can. No, I can. But it's like it just gave us a different perspective. How if we leverage our situation right, we won't be as bad as we think we may be.
Yeah, and especially on the heels of last week's conversation, because the headline is like, it's fear based, like 2.3 trillion evaporated.
Yeah.
It's like, okay, hold on, you dig into it, there's tons of equity left, and so especially off the heels of that conversation last week, and then talking about this week, like this is I'm even more confident that this is going to be a huge booming part of real estate and mortgage in the next 24 months, if not longer.
Yeah.
And people aren't speaking about it, so that's one of the biggest things that once
That's so crazy.
Yeah, exactly. So once people get more
we're finally
information
doing
about
it.
it and actually know what benefits they can gain from it, it's going to be a no-brainer for those
Correct.
that really do need that money.
Wow.
Because it is going to get a little bit harder before it gets better. So I would suggest that if you have security and you're able to put yourself ahead, why be reactive when you could be proactive?
Have this seems I'm walking away from this conversation and going like, this is really important.
Yeah.
Like, this is super important for people because of what it means. Like, forget the product's important. You need to know all the details, the facts, and qualification. Fine. What it means on the end of it, I think, is really, really critical.
Yeah, no. And again, I mean, if my parents in that situation, I'm going to try to understand it for them so that they can live. I mean, I would love my parents to be here longer, right?
100%.
So I'm going to look after these things.
Yeah.
I'm just, and again, there's no obligation to any of this. Just go and ask, you know?
Yeah, that's good.
And
That's
it's
good.
free information. I mean, share it with anybody that you feel is going to be able to gain from it.
Free?
Free 99.
Free 99?
Free 99.
Like they say,
free,
right?
50 free.
Free 50 free.
Well,
It doesn't cost you a penny.
It doesn't cost you a penny, but it can cost you thousands if you don't come and speak to a
That's
professional.
it. So you absolutely,
Okay.
looking at this, it's home value versus life expectancy, Andy.
Yeah. Okay. Yeah, that's good. I think this is a conversation people should be having. And also, if you're watching this or listening right now, and you already have a financial planner, you already have a trust and estate attorney, and you have a tax preparer that needs this message, please forward it to them, or you can introduce us to them for two reasons. Number one, we can bring clarity to your specific situation. Number two, we can be a resource for all their other clients. And number three, they can be a resource for us because we might encounter people who need a reverse mortgage and they don't know the answers to the questions that only a tax person who's done this before can handle. So this is very much synchronous in my opinion. Symbiotic, I should say.
Yeah.
So please introduce us to those people and we will likewise do the same. This was a really good topic, guys. I feel great about the show today. I'm really grateful that you guys brought your notes and your details and your situations. Thank you for the awesome story. If you have questions about reverse mortgage, please reach out to Brian directly, William directly, or you can DM, comment, leave a comment in here. And we want to help you. And even if you're watching this and it's your parents we're helping, because you're helping them you're in the sandwich generation. You have kids, you have adult kids, you're an adult yourself, and you have adult parents who need help. Please let us know so we can help you guys out. Thank you guys for an awesome show today.
And again, not much is needed, Brian.
Nope.
Yeah.
You know, age, how much your balance is.
Value of the home.
Birthday.
We'll create the birthday. I have age. That's what it goes. So it's very easy. Just DM us or just give us a call. And
100%.
no obligations.
All right. Okay, guys, thank you for a good show. Thank you again for watching the Mortgage Heroes Weekly Podcast. We appreciate you very much, and we'll see you again next week.
That's right.
We out.
And if you guys see a cow, let me know. Woo!